If I started from zero today, would I still be buying real estate as my first asset class? I'm going to show you in this video with my trusty whiteboard exactly how much power a real estate portfolio can give you, especially if you start early. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now the thing is, I started investing about 9 years ago, but I've been a student of the markets for a lot longer than that. Yes, I'm a nerd, but it's okay because I accept it. At the end of the day, if you're here, you're probably interested in learning about real estate. And if you're wanting to outsource that, wanting to buy with confidence with a team, then definitely check out the link in the description below to the website to my buyer's agency, Search Property, and you'll also find my email pinned in the comments down below. Now, for those of you that are new here and you don't know my backstory, I basically built my wealth on the back of real estate. And I did that predominantly by buying properties in regional Australia. You can check out a detailed breakdown of what my portfolio looks like over here. So fast forward 9 years from when I first purchased my property, now knowing what I know and what the economy looks like at the moment, is it still a good idea to build a foundational property portfolio, or is there another alternative way to do this? Let's jump into my whiteboard and showcase what that alternative looks like, as well as what the power of property can actually do for you. Now, unfortunately, all the way through schooling, as well as the people around us, told us all to do one thing: buy your own home because that's the best asset. Unfortunately, that's not what the rich do, and is why 99% of people don't actually move past their second or third property ever. So if we're looking at building a property portfolio to really get financial freedom, how do we do that? Well, what we need to do is focus on the right thing, and that is building the foundation. Rather than going out there and just buying a place for yourself to live in because you thought it was a good idea so you can post on Instagram, what you're wanting to do is do this logically. Spend some time, figure out a strategy and a tactic. Now, if you're someone that's already bought a property, you bought your first and your second, and now you're thinking, well, I don't know, is this going to apply to me? It definitely still applies to you, because a foundation portfolio should consist of anywhere between 4 and 5 properties, and I'm going to break down some numbers very shortly. But the idea is you need to focus on the foundation first. As you can see with this lovely diagram, the idea is if this being the foundation is solid, that is when you're going to make the biggest gains, because that's a sustainable portfolio. You can hold it through multiple cycles. In a year like we've just had in 2022, we had rates aggressively increasing. Cash flows got smashed. So a lot of people have had to face mortgage stress because they didn't have the right tactics when they bought their properties. They didn't look at cash flow because they simply said, hey, capital growth is everything. But if you knew that there's areas out there, there's properties out there that you can buy that give you cash flow and capital growth, you would definitely have gone down that path. Now, unfortunately for you, if you don't have time, then it's probably going to be a lot more difficult. And that's why you look at outsourcing it to a buyer's agent, because it's not just about locating and negotiating on the price. It's also about how do you go through the process to settlement, get the right tenants in place, and then have that adaptive mindset to keep growing wealth. So let's look at an example. If you're 30 or you're 25 or you're 35, just apply the same numbers to your age. But effectively, if you're 30, and we use this example because I'm 30, but if I was starting today and I said, well, I want to buy something and I've got $80,000 available to me, what am I going to do? Well, yes, there's alternatives and we're going to talk about that, but what happens if we did it with property? Well, you can go out there today in today's market and buy a property for $450,000, and I'm talking about a 3-bedroom brick home. And yes, this is still possible today. So what you're effectively doing is you're using your $80,000 to control an asset base worth $450,000. And here's the big takeaway. I want to control as much in terms of the machine and the assets relative to the money I put in. And of course, you get to do that quite well with leverage when it comes to real estate. I can go in and buy a property cash only, but why would I put 100% down when the bank's going to assist me in buying that property? They're going to give me 90%, I only have to put 10% in. So all of your upfront costs will be covered with the $80,000. And what you're wanting to do is say, well, if I started today and then I decided never to buy a property again, or at least for the next 5 to 10 years, what would that look like? At a conservative 7% growth rate, in 5 years' time, your property would be worth $631,000, and after 10 years, it would actually be worth $885,000, almost double what it would be worth today. Now, this is all well and good from a capital growth perspective, but if you're negative cash flow by $10,000, $15,000 a year, and then interest rates keep moving up, you're going to now find yourself stressed out, and ultimately could lead you to selling the property when really you should be holding it through multiple markets. That's why I like to focus on positive cash flow property. It allows me to stay in the game for as long as possible, and it doesn't affect my lifestyle. Being 30 or being whatever age you are, you want to enjoy life, right? You don't want to just go, oh, all the money I make, I want to invest because tomorrow is going to be a greater day. Well, you could wake up dead tomorrow.
But if you wake up dead, you'd be dead. So scrap that.
Basically, you're not going to be in a position to enjoy the fruits of your labor today. So I advocate for investing the smart way, do what the rich are doing, learn from them, and then follow the money. That way you get to enjoy tomorrow because you're being smart about it, but you're also in a position where you get to enjoy today. And I would go on to argue that if you're in a position where in 5 years' time, you have an extra $180,000 to $200,000 worth of equity, you're probably going to have more confidence to go on an extra holiday and have that lifestyle component. Now, when we're talking about a foundational portfolio, what does that mean? Well, it looks like 4 to 5 properties, and I would be looking at that sort of 400 to 450K range. So effectively in this case, if we add $1.8 million worth of assets growing at 7%, that means we're at a position where we're going to have a property portfolio growing by $126,000 every single year. And the best part, it's tax-free because you're effectively borrowing against your assets. Now, I'm not a financial advisor and I can't give you financial advice. I can give you property advice and I know this stuff inside out. The thing is, when you go out there and you say to someone, I'm gonna borrow equity against my property, they're probably gonna turn around to you and be like, you're an idiot because the bank owns you. Why would you wanna take on more debt? And that is where you need to take a step back and realize 99% of people, yes, that's a stat I just made, but 99% of people are focusing on exactly that mindset. And that is why 99% of people, or the majority of people, will never get to financial freedom. They'll work to 65. And you watching right now are not wanting to be in a position to work till 65, to work till 75 and still not be able to enjoy life today. So in this case, if you make a few smarter moves right now, you'll put yourself and your family in a position where in the next 5 to 10 years, you'll have so much more choice. So even today, if I'm looking at buying property, I'm going, how does this one property give me 3 things? It gives me the ability to go in and invest in other assets. My story is that I went out, bought a bunch of property, kept buying and building up my portfolio despite all the white noise and the garbage that I saw on media headlines, which suggested the market's crashed like 6 times in the last 9 years, but I still continued investing. What I was able to do was get some of that equity out, go in and invest in other assets. Now for me, I've got a 3-pillared approach. I like real estate because it's traditional and a big portion of my wealth is in real estate. It will continue to be so. But then from there, I've been able to go out into other asset classes like cryptocurrency and for me, Pokemon cards and collectibles. Now, if you watched till this point and then thought, this guy sounded smart until he said he invested in Pokemon cards, you've got to take an open-minded approach to this. It's Pokemon cards for me because I understand that really well, which means I can still get a 20 to 50% return year on year compounding. That's because I love it and research it and I'm super passionate about it. Yes, again, we've established I'm a nerd, but let's continue. In your case, you might look at ETFs, you may look at stocks, you might look at crypto, you may look at just diversifying within property, but within different locations. The other benefit it gives you by investing in property early is to be able to actually go on holidays and enjoy your lifestyle. If you went and refinanced all of that out and you decided, well, okay, I've bought a property, now I've got $100K worth of equity, I may decide for $20,000 worth, I'm gonna go on a holiday, I'm gonna buy a new car, I might enjoy my lifestyle a little bit more, and then with the remaining 80, I can go in and buy another property. Or alternatively, if you didn't wanna go on a holiday, you could then go and say, well, I can use that money to renovate the house, increase my cash flow, and increase my equity position. You have a lot more options. And the whole idea about investing is you put stuff aside today so you have more options tomorrow. In this case, you're able to enjoy today and tomorrow. And one of the biggest reasons I like to invest into real estate and will continue to do so is it gives me support for my side hustles, my passion businesses, which has now ultimately become my full-time gig and has allowed me to build a team of 4 employees. If I didn't have the foundation portfolio, it wouldn't have allowed me to have the upfront cost to start up something. It also wouldn't have given me the confidence to be able to take risks that I naturally wouldn't have, and I would have continued a 9-to-5 job. Now, there's nothing wrong with having a 9-to-5 job. Most of the people, including yourself, might be watching this and say, well, yeah, I work 9 to 5. Like, what the hell? This guy's giving me shit for it. No, I'm definitely not. In fact, I'm probably going to say to you, stay as long as you can, because if you can build out this machine while you're at your 9 to 5 and then spend 2 to 3 hours a week just working on that side hustle or what you like and the hobbies that you have, then you're effectively figuring out what you want to do after early retirement. I mean, look, it sounds great to sit on a beach when you have to wake up at 6 a.m. and go to a job you don't like, but I'm telling you, that shit gets boring. What you want to do is go, hey, if I can do this today and then use the system to be able to go, well, a pay-as-you-go employee gets a loan a lot easier than a self-employed employee, build this foundation, build the portfolio. Then after 5, 10, 15 years, if you've been going and putting aside some time towards a side hustle or a passion business, guess what? When you don't need to rely on the income that you generate from your 9 to 5 job, your machine takes care of it. Now you can enjoy shit that you actually like doing. And another way to look at this this entire thing is that once you've got the portfolio, you can then decide to go out there and buy the dream house, the one that's the emotional purchase, because you're now no longer worried about how much this is going to cost. What you're figuring out is, hey, do I like the kitchen or do I not like the kitchen? Because my machine is based on pure logic and numbers, and that allows me more choice for when I ultimately want to buy my own dream house. I hope you guys have enjoyed this video. The whole idea here is that you want to figure out what is the best asset class for you right now. And again, it could be stocks, it could be crypto, it could be a bunch of other things. But if I was to start again today, I would still do it this way. And the reason, well, you've just watched the video, so you should know. Smash that like button if you enjoyed it, subscribe if you haven't already, and I'll catch you guys in the next one. Thanks, guys.